We begin, as always, with three things investors ought to be thinking about right now. Stocks ended the week pretty much where they started, up a little bit, but there's a lot going on under the surface. Here are the indicators we're watching. We'll take a look at the hottest stock in the S&P right now. It's all about artificial intelligence. And a closer look at Ford's EV business. How does it compare to its competitors? On the Barron's Roundtable, my colleagues Ben Levisohn, Carleton English, and Andrew Bary. So, Ben, the market ended up about 1%, but the road to a slight hike was very bumpy.
Yeah, it was a pretty wild week, but at the end of it, you would not know that we still have a banking panic going on. These stocks are under pressure. You wouldn't know that the Fed had just raced by a quarter point into this banking panic because the market did go up quite a bit. But the problem is when you look underneath the surface, things are just not looking great. Banks seem to be cutting back on their lending, and that could be a big problem for the economy. And we're also seeing things like junk bonds. We had a big leap in the number of distressed issues, and that's often a precursor to slowdown going ahead.
Well, while the stock market might not tell you things are bumpy, the bond market certainly did.
Yeah, they really did. We had the two-year yield fall to its lowest level since September. That's the one that you watch to see what the Fed may be going to do with rates, and it's saying the Fed is going to have to cut. And that's because you look at the 10-year, it's fallen too, and the growth looks like it's going to slow down quite a bit. So the bond market is really saying, hey, we need to slow down here. The economy is going to slow.
Another issue, I think, is earnings. I was talking to the economist Nancy Lazar this week, and she thinks earnings could come in very weak this year with the economy, and that's potentially another risk for stocks.
Yeah, no question about it. Ben, one thing kind of did work. It felt like the 2010s all over again because big tech actually held up.
Yeah, big tech has been the thing that has really lifted the entire stock market. We had Apple is up 3%. The communication services sector did really well also. And these stocks are really propping up the market. But it was also in the smaller side of the tech, too. We had Snap up about 5% this week on this TikTok pressure that we talked about last week on the show.
Yeah, TikTok goes away and Snap looks a little better. So let's take a deep dive into one of those big tech stocks, actually constantly getting bigger big tech, Nvidia. Andrew, what's behind that move?
Well, Nvidia is the hottest stock in the S&P. It's got the biggest gain so far this year, and it just passed this week Berkshire Hathaway to be the number 5 stock in the S&P 500. It's all about artificial intelligence and ChatGPT, which is natural language responses to search queries. It requires enormous computing power, and Nvidia makes the chips to make that happen.
It's amazing when you think about all the components in Berkshire's portfolio that one company is bigger. Another tailwind for them is Bitcoin because the chips are used for mining.
They're used for mining. Bitcoin is having a bang-up year. It's up about 60-70% this year, and that should help their business there. Okay,
all convincing stories here, but the stock is pretty pricey. Is this all priced in?
Well, I mean, a lot of good news is priced in. It's the priciest big stock in the S&P 500 right now. It's probably trading for about 80 times this year's earnings. Our tech reporter, Tay, doesn't think that ChatGPT may be all that it's cracked up to be. So there's a lot of risk. People are valuing the stock now on 2027 estimates. And even based on that, it's trading for about 25, 30 times 2027 estimates. So a lot of good news is baked into that stock right now.
That sounds like 1999 all over again. Let's go back to the mostly analog economy. Carleton, Ford opened the books a little bit farther this week.
They did. So they are now disclosing their EV sales. Now, the thing that got investors nervous is that it says it will be losing $3 billion in EV sales this year. That's coming off of losing $2.1 billion in 2022, selling about 96,000 units.
Going in the wrong direction.
Going in the wrong direction. Now, the question is, when do they turn that corner, and how do you compare it to Tesla? So for Tesla, they really only became profitable when they were consistently doing about 400,000 cars a year. Al Rood, our colleague, estimates that Ford will need to sell about 500,000 a year to become profitable, and that could come in about 2025, 2026.
Potentially bad news for all the automakers. The banks are getting a little bit tighter with lending.
Yeah, so a few things going on here. I mean, as rough as it looks for something like Ford, you do have to look at like competitors such as Rivian, which was losing $7 billion, selling only 20,000 cars. But when you look back at the whole auto industry, Ben was talking about how banks are tightening up lending standards. We're definitely seeing some evidence of that in some recent reports where the rejection rate for car loans is at 9% compared to a level of 5.8% in 2017. And also, delinquencies are going up too.
None of those are good signs right now.